Hi, I'm Bill Blain, strategist at Shard Capital and author of the Morning Porridge Market Commentary. This is one of Shard Capital's regular light bites. Today, I'm going to talk about the weather, net carbon zero, and why ESG, that's environmental, social, and governance-based investment, is building a dangerous bias against gas that could well prove disastrous for long-term energy transition. Now, I'm not a climate change denier, but let me try and explain the problem. Take a look out your window this morning. Have you noticed the weather? It's absolutely beautiful and utterly windless. That's because there is a blocking high over the UK, which means wind speeds to generate electricity from wind farms are very low. At the same time, the price of gas has rocketed. The lack of wind power and high gas prices mean that across Europe, coal plants are at full pelt. In Germany, it's 45% coal. Holland and the UK are both in excess of 60% fossil fuel at the moment. Coal plants have been fired up everywhere, and China is burning more coal than ever to power its economy. This month it will exceed 400 million tonnes, up from 50 million tonnes just 20 years ago. On the plus side, Scotland has approved 25 gigawatts of new offshore wind farms, much of which will be new floating wind technology. Environmentalists are furious we're burning so much coal, but unfortunately they have no one to blame but themselves. They are the ones who have demanded we stop any and all investments into successor fossil fuels. The result is Europe's sudden shortage of gas. And gas is a much cleaner step to interim power on the road to carbon zero in 2050. You can clean up the world just by stopping to use coal. Recently, the head of BlackRock, the world's largest investor, suggested companies should build gas into their energy sustainability plans, and as a result, he was pilloried by militant environmentalists and ESG proponents for his temerity in suggesting it. The head of Morningstar's Sustainability, the agency that promotes sustainability ratings, said, "I was disappointed Fink saw fit to tout the ongoing importance of natural gas as a transition fuel." The thing is, we can't just discard fossil fuels overnight. It will be a number of years before a new and hugely expensive new floating Scottish wind farms come to line. However, we can still reach net zero by 2050. There is a path that gets us there, and it involves using gas as a key interim transition fuel. It's far less CO2 damaging than coal. We need to continue to develop effective renewable power sources, but we also need to look at things like reforestation, soil improvement, and becoming more energy efficient. We can even speed up carbon zero if we adopt nuclear. But ESG compliant investment has built-in bias against anything dimly perceived to damage the environment. Investors routinely turn down any investment, no matter how beneficial or pragmatic it is, if there is even a hint it might generate negative environmental press. Militant ESG is now the single most important factor determining complex power investments, and as long as the answer is always no, then it could now damage the goal of achieving net zero while maintaining global growth. If you want to learn more and for a deeper dive into the above topic with the figures, more arguments, considerations, head over to the article which is linked in the description below, and can I also direct you to the Morning Porridge website to read more about how finance is evolving. Thanks very much. We'll be back with another light bite next week.